You're always being told to invest your money, even when the stock market is volatile. Some even say now is the best time to invest because of low prices. But exactly what should you be investing in your 20s? In this video, we have included our top 5 long-term investments you should be making in your 20s. Some of them are recommended by great experts in the matter. The goal of these investments is to start making money and saving from your youth in order to overcome inflation and have lots of money when you're older. Maybe thanks to some of these, in the future you will be able to retire comfortably, so stay in this video and listen carefully. 1. Invest in the S&P 500 index funds. As a young investor, your investments should be concentrated on growth-oriented assets. That's because in the decades ahead of you, you can take advantage of compounding of much higher rates of return on growth investments than you can get on safe, interest-bearing ones. The S&P 500 index has provided an average annual rate of 10% return going all the way back to 1926. That's an incredibly powerful source of compound earnings. While the stock market is rather volatile these days due to concern over the coronavirus's rapid spread, stocks are still a good choice if you're young. You can take advantage of low prices for top stocks. Plus, you have plenty of time to weather the current stock market lows. Just be sure only to invest money that you don't currently need. 2. Invest in real estate investment trusts, REITs. Real estate is another growth-type investment strategy, and you absolutely can't get enough of those when you're young. Investing in a REIT, Real Estate Investment Trust, REIT is an opportunity to hold a portfolio of commercial real estate. This can be more valuable than owning a single investment property because the portfolio is invested in different types of property in various geographic locations. That gives you greater diversification than you can get with a single property. Another significant advantage is that you can invest in a REIT with just a couple of $1,000s. Buying an investment property outright would require a much larger amount of capital just for the down payment. We can also add that you don't need to actively manage a REIT the way you would with an investment property. REITs have the advantage of investing in commercial real estate, which often outperforms residential properties. There's even an argument that REITs have outperformed stocks in the past few decades. But even if the returns are no better than equal to those of the S&P 500 index, a REIT is still a valuable hold for young investors. First, real estate has been a strong performer over at least the past half-century. Second, and perhaps more important, real estate and commercial real estate in particular often moves independently of the stock market. 3. Invest using robo-advisors. We've already discussed investing in stocks through S&P 500 index funds or commercial real estate through REITs. But if you're not familiar or comfortable with investing on your own, you can always do so through a robo-advisor. That's an online, automated investment platform that does all the investing for you. It includes creating your portfolio, then managing it from now on. They even reinvest dividends, periodically rebalance your portfolio, and offer various tax strategies to minimize your taxable investment gains. What's more, you can use a robo-advisor for either a taxable investment account or a retirement account, particularly IRAs. It's hands-off investing at its best. All you need to do is fund your account and the robo-advisor handles all the details for you. And they typically invest in a mix of stocks and bonds. Many also offer funds that focus on ESG stocks. We like Wealthfront and Betterment, which are the two largest independent robo-advisors. Both offer an incredible range of investment benefits and are on the cutting edge of the industry. 4. Buy fractional shares of a stock or ETF. You don't have to buy full shares of a stock or an ETF these days. If you want to be more hands-on with your investing but can't afford a lot of stock, consider fractional shares. This is when you buy a portion of a stock for a fraction of the price. For example, if you want to buy Netflix shares but can't afford $500 to buy one share, you can invest $20 instead and buy just a little bit of that one share. With fractional shares, you still own a portion of the company. Not every investing app or broker will let you buy fractional shares. One great app that will also allow you to buy a portion of shares is public.com, as it's a commission-free stock and ETF trading app for iOS and Android. It also supports fractional share investing in stocks and ETFs. 5. Improve your skills. Most people don't think of improving their skills as an investment. But as a young investor, that can actually be one of the very best investments you can make. After all, the income you earn over your lifetime will be your single greatest asset. The more you can increase it, the more valuable it will be. Plan to invest at least a small amount of money and time in acquiring any skills you need in your career. You may also think about skills you want to add to prepare you for either a higher paying job or even for changing careers later on. You can take additional college courses, order online courses, or enroll in various programs that will add to your skill set. Sure, it will cost you money in the short run. But if it will increase your income substantially in the future, it'll be some of the best money you ever spent. And that's an investment in the truest sense. So with this, we conclude the top 5 investments you should be doing during your 20s. We really think saving and investing will help you with your financial management, and it will also be a step forward in order to achieve financial freedom. This is all. We hope you enjoyed the video and it was helpful. Don't forget to give us a like and subscribe to never miss one of our videos. Bye, and remember, save and invest to be free.